All right. How you doing, friends? This is the final hour. 0 days to expiration. I have got a problem here. There it is. All right. Thank you. So I'm trying new things, and every time I try a new thing, it seems that I always forget one window open. But there you go. So I got a little green screen going on here. We're going to try putting a chart in the background in a little bit. And as I get all of this stuff under my belt, the production value will go way up. So today was if you saw the thumbnail of this video, you saw that I had suggested that there's some really nastiness going on down below the June lows, and there is. I mean, if we drop below the June lows, and we almost did last night in the Globex session overnight. In fact, we tested the waters a bit, and then at about 6 o'clock, all of a sudden, there was an abrupt move up, and that move up never stopped until this moment. And in fact, it looks like we're about to break new highs as I speak, as I utter this word, which is crazy. I mean, that was let's see, what kind of move was that? That was from 36.14 all the way up to 37. Wow. 114 points on the S&P. That's an incredible move, considering that we've been doing nothing but going down. So you might look at that and say, oh, it's probably a relief rally or something like that. It's just oversold and the sentiment was just off the charts, which are all true, but I don't think that that was the reason why we went up. I think we went up because of a more psychological thing, something that's going on with the market that they got whiff of, and they thought, okay, maybe that is going to come over here. What I'm talking about is the BOE, the Bank of England. They announced that they were going to basically buy bonds until they fix their contagion. Now, this is more or less going against what their new prime minister wants to do, who is more of a fiscal conservative. And they think that that's what they need to do. They need to stop the shrinking or the fall of the British pound. They need to try to get more money in the hands of people. And all the while, the new PM is trying to cut taxes and do the right thing. So there's really quite a battle going on there. But anyways, the reason why this was positive for the market today, that this is basically an about face from the hawkishness or fiscal tightening or the quantitative tightening. This is definitely going the other way. This is what you might consider a pivot. Now, I think that on this side of the pond, we're looking at that as maybe the Bank of England is taking the lead in all of this, and that the Fed will also be considering a pivot once they realize just how bad things could be if we dip below that June low. And I think that that is really what's going on here. They're thinking that maybe the pivot is still on the table. Now, from what I can tell, and from the Fed governors and Powell and what they've said in the past week, that doesn't match. Now, I know that Powell spoke today, and a couple of Fed govs and some of the central bankers in Europe, they spoke today. So I don't have the full picture yet, and I'll have to do an analysis of that and see whether or not they are supporting this move by Bank of England. If they are, that would be something. I think if they were, you would have seen the market not go up 114 points, or now it looks like it's about 120 points almost. You would have seen the market go up 500 points, easy. Because that would have meant that ding dong, the the witch is dead, and at the same time, the emperor has no clothes. So, mix those metaphors together and see what you get. You get a mess. So, on the other hand, this could have just been a relief rally. Maybe the BOE this had nothing to do with the BOE, and in no way was the market um, I guess, diverting from reality and thinking that there is going to be a pivot in the Fed's monetary stance. Now, if you go and you look at the Fed Watch tool, you'll see that there is about a 50-50 odds on whether or not they're going to, in the November meeting, November 2nd, which happens to be just before the election, November 2nd, that they're going to raise it, the overnight rate, 50 basis points or 75 basis points, which is unusual because it sounded to me like the Fed wanted to do another 75 basis points. Why would the markets believe that that has changed in any way? So this is all very confusing and makes you wonder exactly what is going on. And is the Fed really just ignoring the problems that we have, the systemic problems that we have, the things that are built in, the things that they have caused over the past 15 years or more, the huge bubble that is the market, and virtually every market, from their injecting cash into that market, just basically blowing it up to an unbelievable extreme. It just is not going to go away by you continuing to, I guess, create more dovish or accommodative monetary policy. I mean, it just doesn't make sense. It's just pushing the problem down the road, and the further you push it, it's like you're making it huge degrees worse as you push it further down the road. And as I'm talking, the market's making a new high, and it's making new highs every second here. It's crazy. Why? I really believe that there's something went on here. There's some sort of coordinated effort or something. But as far as I can tell, it's really taken the lead from the BOE and somehow thinking that has or will have or be a precursor to what the Fed might do. And I don't know. Why don't you comment on that? Tell me what you think. And let's say hello to see who's on. Hey, how you doing, Craig? We have Greg here. Barry Buxton, how you doing? And that's a new face. Risa, how you doing? And Theta J. Is the BOE doing quantitative easing during a period of increasing rate hikes? Yes, that's exactly what they're doing. I'm sitting here just trying to digest that kind of move. I don't get it. But I do believe now that Wall Street and institutions, because they take the lead of the Fed, they're looking at this as maybe a signal that that's what the Fed is thinking of doing as well. How you doing, Vadim? And Dan Smith is here. Glad to see you all. Now, today, because of this move, and I guess, maybe I didn't look at the news close enough, the global macroeconomic condition, although one of our members did. One of our members took the contrarian position and probably did very well. Actually, did very well. A little over almost 200% return. So, but I did not. I was predicting that we would stay inside of the current volume node and that we would move sideways or likely down. And we did. We started to do that. And then it finally just took off and has never looked back. Vadim saying inhale and exhale all in one move by BOE. Yeah, that's kind of like what it is. It's like burping and hiccuping at the same time. Can you imagine that? Hey, Ziad, how you doing? Nice to see you. So, yeah, it's just such a strange move. Why would you buy bonds when you're raising interest rates? The only thing that's going to do is take their monetary problems, their ability to pay off the debt, and just increase it by it's just like, it's like sticking a hot poker in your eye. I mean, I don't, yeah, man, I am just totally, unless, this is like I said, a grand scheme that is now starting around the world where they feel like, what the hell, let's just keep on Let's just keep the party going, and we'll, who knows what's on the other side. Yeah. And well, what's on the other side is what we clearly see. The in the UK they have 9% inflation. Here we have 8.5 or 8.3% inflation. Now, inflation seems to have quelled or stopped or slowed down. That doesn't mean that it is stopped. It just means that the rate of increase has stopped. And so it's still at 8%, which means that inflation is still high and prices are going up at a rate of 8% per year. They're just not going higher than 8% per year. So I guess in the government's infinite wisdom, that means that inflation has stopped. No, the rate of inflation, the rate of increase has stopped. It's still bad. I mean, it's really bad. Now, the reason why it has stopped primarily, I believe, is because they have been releasing oil from the strategic reserves, and that has been steadily and systematically bringing the price of oil down. Now, you could argue that that's a good thing, that they're doing what needs to be done in order to quell inflation and so forth. Now, it's doing it at a minimal rate. All it really has done is basically stop the rise of inflation or stop the acceleration of inflation. It hasn't stopped inflation. Gas prices have come down, so that is some relief at the pump. However, the big problem with that, the caveat to all of that, there's really two. One is that we're draining our strategic reserve. So if God forbid, the war in Russia starts expanding, we're going to be in deep doo-doo there. Also, when they finally, we are drawing it down significantly. Once we get it down to a certain point, we're going to be vulnerable to any number of different maladies that could happen. And we're going to have to start replacing it. Once they stop taking away from that, everything comes back. Nothing has changed. And so oil will shoot back up. Inflation will start going up probably even faster to get to where it's meant to be. And so all of this is just fake. It's really putting lipstick on a pig is what it is. So and the Bank of England has gone the extra step. Now, the PM has the right idea. They're doing what you might consider the instituting policies that at least she is instituting a policy that is 100% opposite of what our administration is doing. They're embracing fracking and wanting to tap those resources so that they can bring down the oil price in a natural way instead of grabbing it from our strategic reserves, which puts us at tremendous risk. And they also want to cut taxes, which also is a fantastic idea. And but everybody, the central bankers, that's not what they want. That doesn't serve their purpose. So that's where we're at. We're in a crazy world, and I don't know when it's going to change. So let's start by checking out some things that we're doing here in the service and see whether or not we can come up with a final hour trade. We're going to switch to a new look here. There we go. So yeah, so this is what I'm talking about. This this is crazy, isn't it? Here, look at this. We at 6 o'clock, all of a sudden, and I'll bet you anything that that's when the BOE made their announcement, right there. And I should have looked for it, but I didn't see it. I didn't see it until just a few hours ago, and then it became clear to me what was happening. Let's see. Milo saying someone said that the QE word, and the market got all hot and bothered. Yeah. Well, I think it's just the implication, and whether or not that's going to be like the official stance now of major banks around the world, and of course the Bank of England is huge and very impactful, and the things that they do there impact us just the way what we do here impacts them. Now, I just don't know what to say. It's just crazy. But look at this. This is just straight up all day, and we're still going and making new highs. So you can see the arrows here. That was my analysis for today. I thought there were two possibilities. The brighter arrow was my primary thought. You know, once we were, and anything below this this blue area here, then this cyan line, those are the June lows, and we were tapping into that, and it looked like we were about to just go, and then, you know, just at the last second, just as we're about to really lean into it, I guess this is when the BOE made this announcement that they were going to buy bonds until everything was better. that's, that's really what they said. We're going to buy bonds until everything's better. And the market digested that a little bit and thought about it, was a little skeptical, and then said, "Oh, maybe that's what the U.S. is going to do too." So once the market opened right about here, and this is where I thought, you know, I just thought that this was just normal action here in the market, a little bit of a rebound considering all of the downward move, and I took a trade right here, and it basically covered part of T0 here and came down to this LVL, which and even overlapped it a little bit, and so that made a lot of sense to me. It covered a good portion of the area where I thought price might go. In no way was I anticipating or dreaming that a major bank would decide to go full on QE again. I mean, that's like the furthest thing from my mind. It's just crazy, but that's what's happening, and that's why I believe the market's going up. And look at it; it's still going up. It's look at it; it's still trying to make new highs. Wall Street is absolutely delusional with the idea or the prospects that the Fed is going to pivot. Now, what if the Fed does pivot? Now, I could, okay, let's say that that is a possibility. It would be insane, but it is a possibility, even though it is insane. You know, what do you say to that? I mean, do you bet against it or do you go with it? Are we going to be lemmings and go off over the cliff one after another? I guess as long as you get paid. That, you know, that's it. I mean, that's what the choice is. I mean, yeah, I don't get it. I thought the answer from the Fed was to try to put us into some sort of controlled recession so that they could quell demand and thereby bring inflation down. But apparently, but will it work? Okay, so there's the question. But will it work? I mean, you know, my lamenting over it here doesn't really mean that it won't work, right? I mean, it's a possibility, right? uh, let's see. Vadam says ZH is sure of more pivoting to come around the world central banks. Maybe. I'm not sure what ZH is, but yeah, maybe. That's what I thought when I first saw that. I thought, okay, now I see why it went up because, and at first, you know, you look at that and you say, what are they going rogue? I mean, oh, zero hedge. I see. You got to write things out here, Vadim. You got to, you know, no more initials unless they're well known. Um, so yeah. Anyways, that's it. That's what's going on today. And here we are. It's about 20 past the hour. I don't know what kind of trade that we can take here. Let's take a look at what the session POC is. Right now, it's you know, you could make an argument for 36.95. You could also make an argument for 37.15. 37.15 seems to have the most activity around it. It's also around this LVN or this LVL as we call it. So I would say 37.15 might be a good place. A good place for a center strike on a narrow fly. Now, narrow flies are. We did a study. I did a study, and I talked about it this morning. I also talked about it a little bit yesterday afternoon, and we found that narrow flies, especially when taken early in the trading day, are quite problematic. And there seems to be a sweet spot, and we'll get to that in just a second. But before we do, let's read some more comments here. Iz says this is just short term. Everyone buying the dip and obvious support for at June lows. TA shows it clearly. Of course, I don't subscribe to TA is, so you got to know that. I mean, I don't believe in it at all. Even though I would say one of the world foremost experts in TA. I think it's all bullshit. Whoop, I almost said it. This is a family friendly show. Now some shorts getting squeezed too. No, I think it's 100% not TA. That's what I was thinking, oh, maybe there is some an overabundance of negative sentiment, and that's what's causing it. And we went up a little bit, and then all of a sudden it caused a cascade of short squeezes. But then I saw the BOE and what they did, and then it became very clear. So then I had to put on my opposite world hat and then do the analysis. Milo says, like always, bet on the session POC. Yeah, I think so. I think so. And you're suggesting 3705. That's much for, okay. So you're saying even further down here, as opposed to the one that's near, and that's like right in the middle of these LVLs between the volume node and this LVL. There's a lot less liquidity there, but I mean, it could hang out there, I suppose. That's much further away, and it will cost us less to get in than one at 37.15 for sure. All right. Oh, you're saying 3705 on the SPX, and I'm looking at the ES. So remember that the SPX is about 15 points under the ES. So 3705, that would be 3720 in your book. So yeah, you're right. Okay. I got you. All right. All right. Well, TA's a joke, thus the laughing out loud and wink. Oh, okay. I missed that. All right. So I'm sorry for beating on you there, Is. All right. Very good. Yeah. See, I'm not totally awake today. I've had coffee, and I had the world's strongest coffee. See? Death Wish. The world's strongest coffee. 4 times as much caffeine as any other coffee. So you'd think that I would be on top of it, but I guess I'm not. All right. Yeah, I think that well, 3720 or 3715. I don't know. I think 3715 has a better shot, and we probably can get better pricing on it. So let's take a look at that. Okay, there's my strategy. Way off here into the distant on the left. It's outside of the 1 standard deviation move. So we've had more than a standard deviation move, much more. It's been at least a 2 standard deviation move today. Okay, let's yeah, that was a bummer. All right, let's go to an ad at 3705. There it is. Which would be 3720. No, we're going to do 3700. Oh, look at, yeah, 3700. And look what it has, the highest volume too. And we could do 1, 2, 3, 4. We could do a 20 wide there, but let's see what kind of pricing we get on a 10 and a 20 wide. So this is a 5 wide. It's 35 cents. The 10 wide is $1.10, $1.15. And that seems to be right in line with our cost. So let's bring over our cost matrix here. All right, and then after we look at this, we're going to look at the study, so that this will bring it into more context for us. So a 10 wide, we can do anything from $1 to $1.50, and we're still within our sweet spot. A 15 wide has to be between $1.50 and $2.25, and a 20 wide between $2 and $3. All right, so let's see what we can do. So let's go 15 wide. I think we'll be able to do it. All right, so that's 230. So 230 for a 15 wide would be just about there. That's just about a 1 to 6 risk to reward. So that's not too bad. Actually, 225 is a 1 to 5.6. So we would want something like $2 would be much better. $2 on a 15 wide would give us 1 to 6.5. All right, and let's see now. Now, 15 wide's good, but 20 I think is sort of like the breakaway. Now let's see what a 20 wide would give us, and you'll see what I'm talking about in terms of breakaway. So it's 370. That's too expensive. Well, actually, it's no, it's way too expensive. The max we can pay on a 20 is $3, so that's way overpriced. So even the only way we'd be able to do a 20 wide is if we move another strike out. So let's try that. Let's go to just move everything a strike up. So 20 wide at 235. That's acceptable because that would get us right in at about 7.5, 1 to 7.5. So I kind of like that. So that's actually a center strike right there. Let's take a look at what that looks like. Yeah, we got to get rid of all this other stuff. So 20 wide. Now, if you look at this, now we're good. Let's see, 23. So we'd have to move about 10 points. To be absolutely sure of our bet here. So what we're betting is that in the next half hour, we're going to move 10 points towards the POC. Now, that could happen, or we could just keep on going up, right? I mean, why not? Are we going to go up? I mean, it doesn't look like there's any rest here. We just keep on wanting to go up. So I'm just gonna put that out there and say, all right, we have a trade on, and it is right there at 37.10 on the ES. Let me go and grab that and then put it into the. You can do whatever you want on it. All I'm going to do is put it out there and say that that's giving us, I think, the best bang for the buck. All right, let's read some more of these comments here. Theta J says, "Oh, we set up almost the same fly as this morning." No, it's actually quite a bit off of that. That's for sure. Let's see, Batum. SPX volume seems to love to accumulate around strike numbers, round strike numbers. And Ray says maybe should bet on further up. That's what I was just looking at it, and it was still making new highs as I was talking, and I'm thinking, man, why are we thinking now? Yesterday it didn't hit the POC. We missed the POC yesterday, but that was like the first time in about 5 tries that it didn't hit the POC, the session POC. So I think Ray might have a point there. And yeah, this is confirming we're going up to 37.70. Yeah, and I just put this thing on there. I don't know. Yeah. Yeah, feels low probability today. Yeah, I agree. But we're not really moving that far away. I mean, price is kind of steady right now. I mean, if we move 10 points down, we're going to be golden here. It's a lot of risk. I mean, it's pricey now. It's $2.35, $2.30. I mean, that's not the typical trade we take on an experimental trade. But let me show you this study that I did the other day and why we're favoring these wider spreads. All right. And so what we need to do is we need to bring on the old Excel sheet. There it is. Let's see, I just lost my screen. There we go. All right. So I did this study the other day, and this will be the first of many that I'll do on this particular study, just to confirm these numbers. But I think it's showing something very, very telling and more or less known already. But now you can see a very, very clear reason why why we choose one over the other, and where the delineation is. So let me explain this chart here. So what I wanted to do is, if I put on a fly in the early morning, say at 9:30, and I go out of the money with a risk to reward of 7. That's what you see in the upper left-hand corner here, this risk to reward of 7. Because I want to keep that steady, and so that I get consistent pricing across. And so each one of these trades, all different widths from 10, 15, all the way up to 35, are all a risk to reward of 1 to 7. That way I can be sure of the pricing. And then at half-hour intervals, measure how much the center strike, the P&L line, is on the center strikes. And so I did it at 9:30, 10, 10:30, all the way up to 3 o'clock. And then I also plotted it. So this plot on the right-hand side is showing you the premium at all these different time intervals. And you can see, as expected, the premium is decaying at an exponential rate. But what's interesting here is the rate at which it's decaying for the different widths. So that's really the thing that caught my eye. There was one other thing that caught my eye during this time, and that is that during the middle of the day, around 11, well, during the middle or the end of the morning, the market started to go down and IV started to go up. And the premium decay stalled for a little bit. And you can see that if you look at these bar charts. And the yellow bar here is at 11 o'clock. You can see when I click on it, it highlights 11 o'clock on the chart. See that? That yellow bar, and you can see that the price, the advancement of premium kind of slowed down there. And at on this bar, at 11:30, it actually retracted a bit on some of these charts. And in particular on the 20, the 35, and even the 30 and the 25. And the 30. No, on the 25 it didn't for some reason. But that could have been just my, because I'm trying to estimate what the premium is. It's moving all over the place, and I watch it for a while, then take a reading. So it's possible that I just misread it. All right, but you can see clearly that when price went down, and let me show you that action, what happened at 11 o'clock. And that was right here. All right, so this is the trading day that I'm plotting. And at the market open, price started to go down, right? And so I didn't really start recording. Started recording at 9:30, which was right about here. And then here at 10 o'clock. Now, early on, you're not going to see a lot of premium decay. So the difference is going to be pretty wild or undetectable. Very little. You're not going to see a lot of variance. But here at 10:50, 11 o'clock, price started to move down all the way through down to 12:15. So that's the big drop, and it was pretty abrupt. So right in the middle, the first part of the market, up a little bit and then down. So now let's take a look at the charts. And you can see that right here at 11 o'clock. And then also at 11:30, you had this stalling of the move up. Now, so what does that tell you? That confirms a few things. One thing, it confirms the idea that butterflies favor vega negative environments. In other words, the premium or the value of your butterfly will increase faster when volatility is dropping. But in this case, volatility was rising because the price was dropping. So therefore, the decay of the premium got held up. So it wasn't as advantageous for us. Now it's not enough to make a clear cut decision on I'm getting an edge there. I mean the edge is really small. However, if I were to enter, you might be able. If I were to enter a trade around that time, you might get 20, 30 cents of premium in your pocket by taking and entering on the dip. But time is a very stubborn thing. It is the one constant that you can't change. Sure, you can change volatility, but you can't change time. So no matter what, that premium has to decay to zero by the end of the day. So it's going to continue to go up. So in that early morning, we were able to, I see that, but whether or not you can really take advantage of that, I'm not so sure. Now, here's another interesting thing. If we look at the different widths, so here we have 10, 15, 20, 25, all the way up to 35. And then on the times, we have from 10 o'clock, to 2 to 3 o'clock, 2:30 to 3:30, all right? Look at the 10 wide. It wasn't until 1 o'clock that we started registering any change in the center strike, the P&L or premium decay on it. So you would have been, if you took that at 10 o'clock, you would have been wasting your time for 2 hours with zero performance on a 10 wide. Now on a 15 wide, there's no appreciable performance for about an hour. I mean, it starts picking up, but it's still pretty slow. And on the 20 wide and anything up, it starts almost right off the bat. It starts going. Now, the real interesting part is at the progression of this. Now, this is these are calculated based on the very last number in the series, and to see that value and its relationship to the cost. So I wanted to find out, well, what was the return on risk? And so every time I put in a new number, these percentages would update until I get to the very last one. You can see up here, it's a lookup, and it follows the price as we were going through. And so finally, I get to see, and this relationship held for most of that time, right? So what it's saying is that at 3 o'clock, at the end of the day, the return that you get on a 10 wide versus its cost of getting into the trade is only 70%. It's kind of meager. On the 15 wide, it's 213%. That's a pretty big jump. On a 20 wide, it's not much of a jump, kind of flattens out. And even on the 25 wide, from 15 to 25 wide, it's kind of flat, but it is going up. And then when you go to a 30 wide, the return on the amount that you pay really jumps up high, and even higher on the 35 wide. And so I wanted to plot this as a function of width, right? And cost. Well, that is and this is also a function of cost of the trade, and that's what this chart is down here. And so you can see very clearly that 10 wide is a bust. 15 wide is way better than 10 wide. And it's particularly better near the end of the day. And you can see the 15 wide just makes way, way, way more money than the 10 wide, right? So at the end of the day, the 15 wide might be the best alternative. Of course, the 20 wide makes even more money. But do you want to invest $1 more for that and take on that risk? Because you don't know. You don't know if we're going to come into that center strike. I'm just giving you the rate of return and what's the relative value of that return at different points in the day. And then the 25 wide, so the 15 to 25 has moderate increase, and so it's almost flat. You can see that in this bar right here, right? Just moderate. But then it really jumps up at 30 and 35. I mean, they just, and you can see it here. I mean, look at it in the bar chart. It just explodes from 25, 30, 35. Whammo. On top of that, because the 25, 30, and 35 are so much wider than a 20 or a 15, I didn't even bother putting the 10. Um, because they're so much wider, the P&L extends way beyond the break evens on at expiration of the butterfly. So it's very, very wide. It takes on, you can profit from a very wide range of prices. And on the 35, it really pushes out there. So you don't, in other words, you don't have to get as close to the fly during the day. Now, forget about getting to the center strike, because you can profit anywhere from a few strikes out beyond the long leg all the way in. And so that means that you can be further away with a 35 or a 30 and still profit. And that's another thing I want to check. That's going to be my next study, is to see, well, just how far away can you be, and what's the difference in being in a 30, 35, 25, or 20 at various times of the day. Now that's going to be a little bit more difficult to measure. I'll probably have to do many different versions of that to get an average. But what I'm saying here is that we could increase our probability of profit by working on the probability of touch, and without ever getting inside of the profit tent of the fly, just by choosing the right width of a fly. Right? So that's the whole point. So, yeah, Vadam's pointing out the 25 width offers superior rate of decay to the 20 wide. And yeah, but you can say that by for each subsequent one, right? I think the biggest jump is from 25 to 30. Right here, from 25 to 30, right here. That's the biggest jump. Well, the biggest jump is obviously 10 to 15, but 10 is just a throwaway, right? It's almost like, why bother? I would only do the 10 if it were the last few minutes of the market, and then put that on and see if I could make something out of it. So that's another thing, that these wider flies, they make a lot more sense to put on early on in the day, because of the very, very quick premium decay, and what you can actually get out of them, and regardless of whether you're in the middle on the center strikes, or whether you're at the one at the strike at the long leg, or you're even outside of the fly, you can still profit. So that's what I wanted to say, and why I was trying to go for something wide here, even on the final hour trade. And by the way, I wonder how that's doing. All right, so we've actually moved a little further away. So I think that who said that? Was that Milo or Is? Yeah, it was Is saying, "Hey, we're going up." So yeah, see, Is right here said, "Yeah, we're going up." That was his comment. All right, so let's take a look at the chart. It's crazy. That's just insane. I just cannot believe this. All right, so Vadim has an idea here. Hey, Ernie, would you consider putting a wide fly between 9:30 and 10 a.m.? Well, that's what I just said, Vadim. I would say that the wider flies are better earlier, and the narrower flies are better. Well, they're not better, but they would work better if they were put on later. So I don't know what would be the optimum time to put each of these on, and maybe that's after doing enough of these tests, we could probably figure that out too. Uh, so at what time, like if I somehow I'd have to look at the pricing comparison, but I have to look at this from the point of the long leg outside of this is all taken from the center strikes. So this was interesting just to see how fast that it and what's the relationship to the cost. But what happens if I do the same thing at the long leg, right outside of the fly, right? That's that is the question. That's the big question. So maybe I can hey, maybe I can demonstrate that what I'm talking about. Let's find out. All right. How do I do this? No, I don't think I can. Um, I don't have it set up to do that. Darn. Yeah, that's not going to work. Well, actually, yes, I think I could. Yeah, that's funny. The because the green screen's on, when I use the cyan, it's picking up the chroma key. All right, so let's try this. We won't use green. All right, and we'll go to a new screen. Let's draw it. Here's our risk graph. And we'll use purple for our fly. Whoops. Didn't come out purple. I want that. And then we'll use, I don't know, not green, blue. We'll use blue for our P&L line. All right. So what I was measuring was right here at various times of the day, the center strike, and how this thing was growing. Right. It was kept on growing like this. But it would also be interesting to measure it right here, right? Because that's profit. That's profit right there, right? From here, that's profit. So it would be interesting to see at the various times how much profit that you have when you're right at the long strike. Um, and then we'll be able to tell. Now, see, the only problem here is that depending on the, yeah, it should be fairly regular. I think. I mean, volatility will adjust things a little bit, but if I keep to the exact same criteria that I used on the initial study, it should be okay. All right, so we have some questions here. Doc Russell says, I know that you're not a big fan of backtesting, but do you know if it's possible to mine data from TOS to create more examples for these studies? Well, of course it's possible. We could do that. But there's nothing better than doing live testing as we're going along, in my view. Uh, I think that we can find out everything that we want just from a few tests, and we don't have to resort to back testing. Um, we could do the back testing. It's fine. I have no problem with it. But we're not really trying to come up with a strategy per se, like a fixed strategy that has certain criteria for what we're really trying to do is discover the overall characteristic of the growth of premium as it relates to time. So that's okay. So it's not that I'm not a big fan of backtesting. I'm mostly not a big fan of the way people do backtesting, and most people certainly they fail at it. So that's really my big bugaboo about backtesting. And it doesn't always quite frankly, just backtesting just does not give you it. Backtesting tells you what happened in the past, basically, is what I'm saying. All right, let's bring back me. There we are. All right, so I can do that. I just discovered how to do that. That's cool. All right. So I'm going to do. I guess the next test that I'll do will be the one at the short leg or at the long leg, and we'll test that out and see what kind of growth of premium that we have there, and if that reveals anything. Now, one, I don't believe that we have to do too many of these tests. Maybe in slightly different environments, but premium. Uh, the premium growth isn't the characteristic of it. It isn't going to change that much for different volatility regimes. It's going to change a little bit, but not much. And the reason for that is that because we're doing zero DTE and we're only looking at a very small slice of the overall life of that options contract, there's not a lot of variance there. So I think that will be okay. Anybody have any questions on this? Are you excited as I am about doing this? I mean, it's just tremendous, what you learn from here and how it's going to alter our strategy and make it even better. I mean, already it's fantastic, but although today it wasn't so fantastic, losing money on that bonehead move by the Bank of England. I don't know. Maybe they're the geniuses. Who knows? And maybe Powell will become a Bank of England bonehead too, and decide, hey, that's for us too. Yeah, yeah. Let's spend more. Well, I'm glad you like that, JB. So let's see, where are we? It's 3:52. So right now is probably a good time to put on like that 10 wide. Obviously, the POC trade would not have worked. The session POC would not have worked because we keep on going up. And now we're on this other LVL. I don't know where it's going to stop. All right. Oh, okay. So Iz says he likes it and he has something to share. All right. You going to share it here or with me in a PM? So let's take a look at the big picture here. See just how far this has gone up. That's a hell of a move. That is an incredible, incredible move. And I'm going to have to take a look at what Powell has said today. Maybe let's check just to make sure and see what they've talked about today. Maybe there's some insight there. Is for now, let's get a big push to pin my SPN. Okay. Yeah, first things first. All right, that's cool. That's fine. So let's do this. Let's go to the news and see if we can discover what Paul said here. Let's go over here. We'll go to Forex Factory. So Fed Chair Powell spoke at 10:15. All right, so that's kind of telling. At 10:15, this market was well on its way already to go up. So it wasn't him that caused this, but he may have added to the fever. Let's see. Theta J says, I think Jay Powell simply said something like, welcome everyone to a conference. It's probably true. But, let's see how other people analyze that and go from there. So here's where Powell spoke. We can take a look at here. And a lot of times they'll have some news. Yeah, you're right. That's all he said. They were just welcoming remarks. Oh, he just provided the opening remarks in a pre-recorded video at. Oh, okay. So he didn't say squat. See, he didn't say squat. So it had in no way did it coordinate with the Bank of England's fiasco. Or maybe, like I said, maybe it's a brilliant move on their part. All right. So let's go back, and there were other governors that spoke today. All right. So we had FOMC member Collins spoke, and member Mester spoke, but not until 4 p.m. So that's coming up. So let's see what, and then, MPC and German Buba and this President Nagel, they're all part of the, the central bank and treasuries over there. So they probably said something too. But we don't have anything from, okay, not in here. And then, of course, the European Union Lagarde spoke. So she probably said something. Let's see what she said. No, she was super, and maybe this actually bolstered the whole idea. It says economic outlook is darkening to hike rates further. So is it to hike rates or to buy bonds? So while the European Union is hiking rates and England is buying bonds. So I don't know what to say. Okay, so that's Lagarde. Let's find out something earlier, like this one right here. Sharp decline in business confidence in September in Belgium. Well, okay, good for Belgium. Yeah, that is a big move. MPC member. Let's see what this is all about here. Oh, and climate change. No, that's not it. All right, so we have to go to another source here. So what we're going to do is we're going to go to the old FinViz news aggregator because they always have the best news. Banks accuse consumer regulatory abuse of power. Oh my God, so shocking. Druckenmiller believes the Fed's tightening will push economy into recession. You mean it's not already in a recession? Oh, well, here's the reason why we're using the strategic reserve is to bash Putin. Russia's mobilization and plunging oil prices weaken Putin's economic hand. So we're not fighting him with bonds. We're fighting him with strategic reserves. Let's see. Virgin Atlantic. Why is this here in the business category that Virgin Atlantic says men can wear skirts? Yeah, the Scottish, they wear kilts. Is that the type of man you're talking about? Let's see. Treasuries jump market. Let's see. S&P 500 rises more than 2%. Treasuries jump, markets wrap. Okay, well, that's not giving me any information here. I don't know. Someone's calling me from Nantucket. I don't think so. That's a robocall for sure. That's a scam. Okay, bank emergency move driven by pension fund fears. No, let's go further down here. I can't find anything yet. Man, it's all like it's not until you get way down here Biden warns oil companies not to raise gas prices in the wake of the Hurricane Ian. What's he going to do if they raise them? That's what I'd like to know. All right, so here it is right here. Bank of England to buy UK bonds to avert financial risk. Britain's market rout stokes contagion fears around the globe. Okay, so there's the same. That's a Reuters story. Let's see what Reuters has to say. Britain's market rout stokes contagion fears around the globe. Well, it doesn't seem that we're fearful of this. As a matter of fact, we took it as like, hey, the scale and speed of the sell-off in British assets has jolted world markets, raising concern about contagion. So this is probably the reason why they started to buy bonds, that they were afraid that everything was falling apart. So the only thing that they could do was punt. And that's what it appears like to me. So yeah, look at this. The pound versus the dollar. The pound versus everything is down. Well, everything's down versus the dollar. The dollar's just going nuts, which isn't good, by the way. U.S. goods trade deficit shrinks on weak reports. Well, that's because it's still the deficit is still growing. What they're saying is that it's shrinking. The rate of it growing is shrinking. I wish these news organizations would report the right way. Bank of England moves to calm bond market rout after tax cut storm. So they're fighting the new PM's tax cuts by by buying bonds. Are they freaking idiots? Apparently so. And so all of this. See, I have to put my opposite world hat on now and then try to figure out, well, what is the narrative that's going through all of the Wall Streeters' minds when they see this type of stuff happening over Europe, and what is it that causes the market to go up today based on that narrative? U.S. Treasury Secretary Janet Yellen said on Tuesday the United States was monitoring developments in Britain. Oh, see, that's it right there. That is it right there. That's like saying, we have something to do with this, and we're giving them our best advice because we're going to probably do this too. But Janet Yellen isn't the Fed. There will be impacts, there's correlations, some market volatility, and then how it weighs in on the global growth picture, says Paul Malloy, head of Municipal Vanguard. I'm not sure why I'm reading his quote, but he came right after they talked about Janet Yellen saying that they're watching Britain. Yeah, so Britain raises the gilt, which is like our overnight rate, 100 basis points, and then they buy bonds. How does that make sense? And hmm. All right. So Reuters is it's just a hodgepodge of information, but this is the important story right here. A Bank of England to buy UK bonds to avert a financial to avert financial risk. I don't understand that. That doesn't make sense. After this woman here just went through a tax cutting spree. Huh. And Larry Summers claims UK tax cuts as utterly irresponsible, warns of global crisis. So, okay, so now if you have your opposite world hat on, right? What happened to my camera? Turn that thing back on. There we go. So you have to have your opposite world hat on here. Larry Summers claims UK tax cuts as utterly irresponsible. Yeah, I agree. warns of global crisis. Now, if you don't know who Larry Summers was, he's a former Secretary of the Treasury. And a lot of people listen when he has something to say. So, which makes a lot of sense. Now, perhaps the narrative goes that what the UK is doing is utterly irresponsible. Well, which one is irresponsible? Is it the conservative new PM that's doing the right thing, or is it the Bank of England doing the exact opposite that got us into all this trouble? Which one's irresponsible? That's what I want to know. All right, so we have some comments here. Milo says, "Isn't the purpose of raising rates to make your bonds attractive so other people want to buy them?" You know, I don't know that they think of it that way. They raise rates and lower rates in order to control the money supply. That's what I think. To make money more expensive or less expensive. Larry Summers is one of the architects of the global debt crisis, still employed nonetheless. Yeah. So it's like a Dilbert world. You're a manager in a company. The way you advance is by screwing up or doing things that are totally insane or making yourself, unworkable or, hard to be around. Therefore, they keep on pushing you up the ladder. If nobody is buying them, then the rates are still too low. Well, somebody's buying them. JP says, didn't know FinViz is the place for breaking news. Yeah. Oh, yeah. They get the best news aggregator. Now, I used to have a great news aggregator. What I would do is I would tap in with a special scraper that would create tweets out of all the headlines, and then I put it into a my own Twitter feed, and I could aggregate all the news and then customize it, and I would use Google search alert to create the tweet. And so that's one way you could do that now. Still use Google Alerts and pipe it through one of these services that will take an alert or a feed and turn it into a tweet, and then put it into a Twitter stream. And there's millions of them out there. I mean, these are all some of the fake accounts. I've probably got 20 of them. Maybe I shouldn't have said that. And but I used to use it so that I could aggregate feeds to exactly what I wanted to see, and so I could create feeds that would track certain types of analysts or certain news stories or global macro conditions or whatever I wanted. So it's a very cool tool, and it all stems from Google search. Google search alerts or Google alerts. It's a cool tool. All right, let's see. Milo still misses Google News. Did they squash that? Where you could build a page of RSS, but see you don't need Google News to do it. You can do it in Google Alerts. That's what I'm saying. You can go to. I'll show you. All right, so here's one that I started here, right? Create an alert about something. Let's say, what do we want to create an alert on? We could follow somebody. We could follow somebody like Jerome Powell. All right. So we would see what options do we have. We're going to create an alert. How often? We'll do it as it happens. Sources automatic. We want it from news, right? how many video. Okay. Then we want the language. We want English, region, any region, how many, only the best results, and deliver it to an RSS feed. See, there you go. Now I'm going to create the alert. There, I got a Jerome Powell alert, and here's my feed. Then I can take this feed and I could use a service like deliver it to. I think that's what it is. Um, how do you? Let's see. I think it's DL. I think it's dlv.it. Oh, that was CLI. That was wrong. I want dlv.it. Is that it? Must not be it. Maybe it's div.it or dilv. I don't know. It's one of these. I can't find it, but we could do something like inject RSS into Twitter. What is that? Automate Twitter. See, there's all kinds of services here. There are some that will go into Twitter and some that will come from Twitter. Turn Twitter into RSS feed, add Twitter to RSS. No, see, I don't want to do any of that. I want it to go into Twitter. Well, anyways, I know that there. Oh, here it is. Here's the one that I was looking for. Post RSS to Twitter. All right, so here you go. You can create the Google alert, and then you take this RSS feed, and then you feed it into deliver it, and then it will deliver the feed, any new items coming into the feed into your Twitter. And so what you'll get is a Twitter tweet that will be the most recent results of that Google alert you created. So there you go. All right. So let me just show you some ideas here. Now I've done this a lot, by the way, as you could probably tell. Oh, why am I doing that? Let's see. All right, so let's search for Ernie Varatimus, and we'll see how many accounts does Ernie Varatimus have. All right, this one here. Ernie Varatimus, the news unit. Is this still working? Let's look up news. Yeah, here it is. News Grader. Breaking news. So this was one of them. So this is exactly what this does. This will go out and find news using that kind of service. All right. Look at that. See that? You learn something new every day, right? All right, we got a reversal candle up here. All right, let's see. Where could you build a page of RSS feeds? Well, I just showed you that. So everyone likes that. I don't know how many people hanging on or if that was just too boring, but I just showed you a way to create your own news aggregator with a couple of simple tools, and it won't cost you anything. And if you're good at creating searches with Google Alerts, you can actually create a very powerful aggregator on virtually any topic that you want. So there you go. And you think that if Elon Musk buys Twitter, do you think he'll stop that? uh, I have a lot of feeds. I have a lot of Twitter accounts there too. Some of them have quite a few followers too. That they're all completely automated, and all they are aggregators. And but I used it for my own research. That was the power of it. I wasn't using it to try to promote anything. I just use it to find different information. Like one time, I was very into following all the analysts that followed Apple, and so I found all the analysts. You go to rank it. Um, here's another one. Yeah, go to rank. I think it's rank it. Yeah. So this is where all the no, that's not it. Let's see. Analyst ranking. What is it? Oh, tip ranks. Right. You go to tip ranks. And if you want to find something out about a particular stock or any kind of industry or whatever, all the analysts are listed on tip ranks. I mean, I think I'm even in here. Let's see. Is there any Veritimus in tip ranks? Yes, I am. Right. And look at this. I have 3 out of 5 stars. My success rate is 100%. My average annual return is 24. Anyways, you can find all kinds of experts, the top analysts, whatever. And you can find out all their names of any particular item that you want, and then just create a Google alert that will follow that person in any kind of news or information that they put out on the web or anywhere. Google will find it, and then you can put it into deliver it, and then pump it into your Twitter feed. And now you have up to the date, minute by minute information about anything that you want in the world. All right. So now you can tip me, by the way, for that information right there in the chat, because that information is gold. It's worth thousands of dollars. Of course, it's worth at least a tip. All right. So, and there's lots of different ways to do it. You can use Zapier. You can use a number of different services to integrate all of these things together. But anyways, it is now 19 past the hour, and we're done here. We did not make a trade because the market is crazy. And hopefully everybody learned something and got something out of this today. We went over a lot of stuff. We went over the news. We analyzed the news using opposite world analysis. We did a study and showed how that study can make you a more effective trader and asymmetric trades. And I showed you how to aggregate any information that you want in the world and have it delivered directly to your phone. There you go. You can thank me later. Peace to you all. Time for the music.